Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 16th of September. It's Fed day, FOMC decision tonight. The Fed is likely to be driving a move that sort of paves the way towards average inflation targeting, whether they formally adopt that measure or whether they just take it on through the odd comment here and there in the Fed statement, FOMC statement. Focus will also be on the dot plots and how the market responds to how interest rates are going to be looking, and also economic projections as well. But lots to look out for actually in this meeting that could cause a bit of an interesting move, bit of volatility. We're expecting this later today. But ahead of that move, the dollar is under pressure. It has actually been under pressure in the last few days, really, falling away on that dollar index. Treasury yields not doing a great deal in front of the Fed decision, I might add, but still, we've seen that the dollar is still slipping. Risk appetite remains positive. You've got the suggestions that the COVID vaccination trials are sort of back on track for some of the major trials, and also the a suggestion that the Congress may well be on some sort of path towards finally getting some sort of fiscal agreement, although it's still going to take a while, I think, and they're still got to come a bit closer to each other, but I think an agreement may well be seen, but let's not sort of take that as a base scenario yet, but it may well be happening. Anyway, so the equity markets have been positive. They've just slipped a little bit negative actually on Europe, but yeah, nothing real in terms of direction. We had a decent rebound yesterday on S&P 500 and ticking a little bit higher again on futures today, so sets us up fairly well in front of the Fed. Now, in terms of data points today, aside from the Fed, we do have US retail sales. The data for August is actually expected to be positive again, a little 0.9% recovery month on month for the ex-autos data, which is the core number. Little bit less positive on the retail control, which is sort of more of a targeted number, but still improvement nonetheless and rebound, but still a lot to recover from the COVID pandemic reaction. And later on this afternoon, we've also got the weekly crude stocks, 1.27 million barrels. That's slightly been reduced, actually. It was 2 million earlier. But yeah, we can still see an oil inventory build is the expectation, basically. And then the Fed meeting is at 7, and the press conference that Jerome Powell takes will be at 7:30. Excuse me. So that takes me on to my chart of the day, which is Euro-Yen. Now, Euro-Yen, interesting chart because it had been strong. Risk positive and Euro positive added up to Euro-Yen trading decisively higher throughout May, June, July and August. That has now started to fall over a little bit. ECB's Philip Lane talking the Euro down. 127 was the resistance hit, and then since then it's been sort of backing away consistently. 124.40, how important is that level of support? Old breakout level has become supportive over the last 6 weeks now, and a breakdown would complete a top pattern of around about 260, 270 pips. So that is an important level. But you look at the momentum indicators, are they rolling over? Well, the stochastics certainly are. RSI under 50, MACD lines as well. So there is a suggestion that this one is starting to threaten to the downside. Now, that would tend to come with less positive risk appetite with the yen strengthening, but I think more to the point, I think it's more Euro losing the upside drive. Yeah, it'll be an interesting one to watch, this one now, I think. So with that in mind, I wish you good luck in your trading today. Click here to sign up to our research and also subscribe to our videos. Also, you can gain Trader Talks videos with top trading ideas.